In the past 30 days, I've drew $161,495 from trading forex. I trade live in front of thousands daily. So if you think I'm full of shit, just take a look at the thousands of hours of live streams and live trades. In this video, I'm going to share with you a very simple plug and play strategy I use to get such consistent results. Here's the best part. If you're a complete beginner, that means you've never made more than $100,000 trading before, then this strategy is going to be perfect for you. This isn't just my story, it's the blueprint for what could be your reality. But before we dive in, let me give you a fair warning. The concepts I'm about to share might seem a bit overwhelming at first. If anything feels complex or you feel like you missed out on any detail, remember, rewatching is key to mastering what I'm about to unfold. So, buckle up, grab your notepad, and let's dive right into the strategy that changed my trading game, the new and improved Asia Sweep strategy. Now, I know what you might be thinking. Asia Sweep? What the hell is that? Well, let me break it down for you. This strategy utilizes a few concepts. Number 1, the Asian kill zone. Number 2, liquidity sweeps. Number 3, fair value gaps. Number 4, market structure shifts. And number 5, change of character. And that's it. Let's unpack them one by one. For those new to trading, the Asian kill zone happens from 8 PM EST to 12 midnight EST. This is where markets are usually ranging and consolidating. This is because the London and New York sessions are where high volume sessions are, and the banks and financial institutions in those parts of the world are still sleeping. This strategy aims to take advantage of the liquidity resting above and below the Asian range. How do I know this? Well, I've seen this scenario play out almost every single day for 6 years now. Next, liquidity sweeps. Liquidity sweeps are when liquidity gets taken out and price reverses instantaneously, leaving behind a long wick. Liquidity is found both at relative equal highs and lows, as well as structural highs and structural lows. At each higher high and higher low in an uptrend, there's liquidity. At each lower high and higher lower low in a downtrend, there's liquidity. These points are important as you'll be able to determine where sweeps of liquidity are likely to occur. Now, arguably the most important, fair value gaps. For those that don't know what a fair value gap is a candlestick pattern that forms when price impulsively moves up or down. And how you identify them is by looking for a 3 candlestick pattern. For a bearish fair value gap, we're looking for the first candlestick's bottom wick to the third candle's top wick. The gap between these levels is called a fair value gap, where there are limit orders yet to be filled, resulting in price having to come back sometime in the future to fill these orders. Lastly, market structure shifts and change of character. Market structure is the understanding of market direction, and we can identify this by drawing our highs and our lows in the market. If you see higher highs and higher lows, we have an uptrend. If you see lower highs and lower lows, we have a downtrend. Change of characters happens when price starts to indicate a reversal is coming. In a bullish trend, when a lower low has been put in place, this is when a change of character happens, indicating a bearish reversal is happening soon. In a bearish trend, when a higher high is put in place, a change of character happens, indicating a bullish reversal. Before we dive into these steps, I'm going to lay out some ground rules. We'll use the 1 hour and 15-minute time frame to analyze the charts and the 5-minute time frame to execute our trades. Change your time zone on TradingView to EST to avoid any potential confusion. This will make everything consistent as time is an important factor in this strategy. So, step 1 of the strategy is to mark out the highs and lows of the Asian kill zone from 8 PM to 12 midnight EST. Ideally, the range between the high and the low of the Asian is not more than 30 pips. But here's the difference between the old strategy and the new and improved one. Use the H1 and M15 timeframes to identify any fair value gaps or liquidity points above or below the Asian range. These are also key points of interest where liquidity can be swept, so you can get even more accurate with your analysis. Step number 2, wait for the price to sweep the Asian range high or low, or the points of interest as discussed earlier. We're looking for a sweep of these areas as retail traders who want to trade the range's support and resistance have the stop loss orders above these areas. We want their positions to be liquidated before we enter a position of our own. In other words, be our liquidity. Step number 3. Once a point of interest has been swept, look for a 5-minute fair value gap in the markets that form away from the Asian range swing points. So, when the price retraces to said fair value gap, we proceed to the last step, which is take an entry at the fair value gap with stops covering the swept swing point and target the opposing liquidity of the Asian range. Let me show you an example of how to use this strategy so you fully understand how it works. The first example is the classic Asia sweep. Here on the 15-minute chart on GBP USD, we mark out the Asian high and Asian low. Now, wait for one of them to be swept. Right there, the Asia high gets swept. So we drop down to the 5-minute chart to look for a 5-minute bearish fair value gap away from the Asian high. We see a change of character and a bearish fair value gap right here. This is when enter a sell with stops above the swing highs, targeting the opposing liquidity at Asia lows. So let's see how this goes. And bam, TP in minutes. In the next example, we'll go through how to utilize the 1-hour PDA. We are on the Euro USD chart. First things first, of course, we mark out the Asia range. Then we mark out any 1-hour FVGs and liquidity points above and below the Asian range. Here, we have an order block with a fair value gap above and below the Asian range. Let's see how price plays out. Okay, now we have stunk into the 1-hour order block above. Let's zoom in to the 5-minute time frame. We're going to look for the same confirmations. Once again, we see a change of character with a bearish fair value gap. Here, we enter for a sell with stops above the swing high, targeting either a 1:3 or the Asia lows. And bam, yet again, TP smashed. Now, pay close attention to the last example. This is where most people would have lost, but you wouldn't know because you don't have the secret sauce. So let's head over to the Euro USD chart once again on the 15-minute time frame. Same thing, marking out our Asian range highs and lows and any significant FVGs or points of liquidity above and below the range. You can see that we have a fair value gap with an order block below, but nothing above. Strange, huh? Let's try to execute this trade with the classic Asian sweep. We take out our Asian highs, so we drop down to the 5-minute chart and see our change of structure with our bearish fair value gap. Same setup, sell at the fair value gap, stops at the swing high, targeting opposing liquidity. But this way you realize, oh shit, we got stopped out. This is because, aside from the Asian range high, we have nothing significant holding price down. However, if you wait long enough, price comes back down to the 15-minute order block and fair value gap we marked out. This is where we can look for a long trade with the exact same confirmations. And right there, that's our buy confirmation, targeting a 1:3 or opposing liquidity. And there you have it, TP smash. The reason why this works so effectively is because you have supporting discount arrays pushing price upwards without any significant premium arrays pushing price down. Use this to save yourself some losses and increase your win rate in trading. There you have it, the new and improved Asian sweep strategy, all consolidated in one single video. Make sure to go and backtest, forward test, and journal your trades for the best possible results while you guys use this strategy. There are so many gurus out there with strategies claiming high win rates, but none of them can back it up by trading live in front of thousands of viewers twice a day. If you can find someone like that, good. But if you can't, then you should definitely check out our Telegram group, where we give free signals daily and all of our recorded trades are updated there every single day. There is also an educational channel where we cover more in-depth on other confluences that you can use together with my strategy. These include things like Fibonacci usage, supply and demand concepts, and many more. So check out the link in the description box below or find a link in our pinned comment to join a family of 47,000 traders worldwide. If you want more of these types of educational videos, smash the like button below and subscribe to our channel to stay updated when we release new videos every week. And most importantly, click on the notification bell to get updated when I go live twice every weekday. And that's all from me, Leonard, signing out.